Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. To start this week, the Australian dollar will try to keep to probably a bullish tone. Now it's broken above the 74-cent level and closed above there on Friday. It is viewed though that towards 74.60-65, the bears should respond to the defense of this level and look to the challenge and push the market back towards 73.45-55. Over the last few days, the commodity-based currency has somewhat been directionless, but now from the slight weaker US dollar is the fact is that the bulls are taking this as an opportunity to take the challenge higher. But I believe that the market will fall into a bull trap. Now, a bull trap is when the indicators are supporting somewhat a bullish case, can actually get caught at the top side of the range and then see a turnaround very sharply and see a fall. So therefore, I do expect to see this to happen. So I'm a seller towards 74.60-65, and I do expect to see this decline eventually come through. Surprisingly, the US dollar is a little bit weaker, but the euro has actually taken upon itself the break of 117.2030 and now poses a slight threat to the upside. As you can see, the market is currently trading around 117.5, and at this stage is looking towards a resistance of 85 with a firm cap seen at 118.5. The market will be very cautious. As you can see from this rejection, it plummeted very hard, so therefore we could see the same or similar pattern coming through again as the market approaches the 118 region. I'm a seller at these levels. I feel the market should respond in terms of a bullish US dollar, so this would see the euro fall back towards 116.85 and down towards 116.30. The dollar yen case has been slightly directionless after the last few days, but as you can see, now poses more of a threat towards this level of 110.25 after respecting it quite a few times. The level is weakening, therefore we could see this market eventually take out the 110.25 and look down towards 109.60-70, which is where I am a buyer. I think the market will stage a recovery from there and eventually look back to the top side where this 111.10 level still holds. So I'm a buyer on dips sub 110.25. My bullish case to the pound has continued, and as you can see, the market, since restoring itself off the base at 130.60, is that the bulls have staged a further rally on Friday. From the advance now looks towards the objective that I'm still holding at 133.25 to 133.80.95. From this region, we could see the pound fall. Support on the day seen at 132.25. Since the bullish outside range day for gold, the market is still holding to its gains, and at this stage still looking towards a potential target at this stage of either 59 to 62 or up towards the 70 region, or stretching as far as 80. There is some concerns over the weekend with the North Korean situation slightly heightening again with the uncertainty of what's really coming out of the meetings that are currently being held by the Secretary Pompeo. Nevertheless, we could see a bit of safe haven demand coming back into the market, therefore should give a bit of a leg up for the gold and look towards that region of, as I said, around 70-80. Support still holds at 1,250. And rounding off with oil, well, we got a long-legged doji, an outside range day, and a stab towards the support. On Friday, the market tumbled to a low of 70.66 before rebounding. I'm still holding to the bear case, definitely from where these technicals are laying, is that we are looking towards this region of a challenge at least to $70 or $69 a barrel, with any advances failing towards the region of around $72.5 to $73 a barrel. Well, that wraps up for today. Thank you very much for joining me. As always, look out for the intraday report, and I hope you enjoy the great start to the new week.